In a world where financial stability once seemed unshakable, a storm is brewing on the horizon. The global financial system is reshaping, and even the United States, which has long been seen as an economic powerhouse, faces a series of unprecedented challenges.
The collapse of this Silicon Valley bank, is this going to cause a financial meltdown?
Meanwhile, Signature Bank marks the third largest bank failure in U.S. history.
There will be bank failures, but this is not the big banks.
The bank failures in the world's biggest economy send ripples of doubt across the markets. Top credit firms downgrade the long-term credit rating of the U.S. government, and people are even starting to question the future of the dollar as the global reserve currency. China and Brazil are switching away from using U.S. dollars in international trade. Saudi Arabia is starting to sell oil in yuan, not U.S. dollars, as it used to for decades. Adding fuel to the fire is the spiraling $35 trillion government debt pile, high interest rates, and the U.S. Treasury that is continuing to issue more and more bonds.
And who buys the Treasury bonds? Mostly the Fed. And how does the Fed buy them? By printing money. So basically, you finance the government by printing money out of thin air.
Look at the crisis. This is absolutely nuts.
With all this happening in just a couple of years, can people still rely on the current financial system? Is it sustainable, or are we at the doorstep of a new major economic crisis? Do governments truly understand what they are doing? And can the current system really be trusted?
People need places to save money, and people need to make transactions.
During the 2008 financial crisis, so when Bitcoin came around, I was like, this is the solution for money.
We want transparency, we want openness, and we don't want to trust, we want to verify.
When you think about remittances, you can see that for such a long time, there was almost a cartel in the traditional financial world that was pushing people that were working on abroad from their home country, and they were charging these people 10 to 20% just to move money in a ledger. That is incredibly unfair, right? You imagine a person that works the entire month in Europe to send money back, I don't know, to Philippines. And they get charged 20% for nothing because they worked really hard, they are trying to help their family home, and that amount of commissions is completely unfair, is unhuman in a way. And from our side, we see how for many countries, remittances are representing even 10% of the local GDP per year. And so USDT is just proving that technology is there to break cartels, is there to break monopolies, and there is nothing you can do to stop technology.
Crypto was born in 2008, and why crypto was born was because the banking and the housing market failed in USA, and it affected the whole world. So the problem was that, the financial infrastructure that we are building shouldn't be dependent or controlled by one third party or one institution. That's why crypto was born.
Blockchain and decentralization is all about not having a central body of control. People across the world are very skeptical when it comes down to one person controlling the information or their data, right? Any big company can sort of listen to you through your phone and things like that, right? So these security issues, I think, is one of the things that the decentralization actually targets.
DeFi will eventually become much bigger than CeFi just because it's easier to onboard more people. Once people understand, oh, well, I guess open up my browser, connect my wallet, and now I have all these types of financial products. That for some people is like revolutionary because they don't have a bank account, or they have very, very limited banking services, or the banks that they have are very, very corrupt. And so I think that DeFi will get the long tail of users. Maybe it's not going to be the most used thing in America or Western Europe when you have a banking system that, for the most part works, but for large parts of the world, they don't have that. And so DeFi is, an improvement over the thing that they have.
I realized this is definitely the new money. And this new money gives people like me, who aren't from wealthy families, whose father isn't a banker, who don't have capital, the opportunity to try and enter this world of finance.
In today's world, we must be free in everything. And financial freedom is the most important. Being able to spend your own money how you want and when you want. But with modern banks, that's impossible.
Relatively speaking, in the long term, we underestimate the total market of just payments and retaining financial value, which is something that if you look back in history, in many societies, we've failed to be able to do just because of problems related to fiat banks, instability of governments. Really what this space to me represents is the decoupling of state and money, which I think is essential for liberty in the future for people.
Initially, governments were hesitant to endorse decentralized finance, understandably fearing the loss of control over financial systems. However, over time, we see more and more countries adopting crypto in various ways. El Salvador became the first country to classify Bitcoin as legal tender. Japan and Australia recognized Bitcoin and other cryptocurrencies as legal property, with growing acceptance among businesses. Even in conservative Switzerland, some cantons allow people to pay their taxes and bills using cryptocurrencies. The progress is unstoppable.
For the last 1.5 months, I've been in basically East and Southeast Asia, and I've been impressed by how much progress there has been here. Like, I remember 5 years ago, they had exchanges and they had mining, but in terms of like research, for example, there was basically nothing interesting happening in like all the longitudes between Tel Aviv and San Francisco, right? Like, now that it's just changed so much.
Hong Kong is very serious about Web3. And you can see already some of its rules. They are allowing for certain kind of crypto retail trading today, for instance. They've given out their first licenses for exchange licenses for companies like OSL and Hashkey, for instance. And of course, I think the most exciting thing isn't that it's just about Hong Kong. Hong Kong probably wouldn't do any of this if it didn't get permission from China. They came a little later to the party, but they're learning obviously what's happening in Singapore, in UAE. My view is that actually it's healthy and good competition.
We want to educate people about this technology. We want to create events, meetups, hackathons. We want to bring in the thought leaders of the industry to Dubai. And we also actually go to other regions in the world to see what they're doing and try to get the best of both worlds. In Dubai, we are very central. We have access to Europe, to the West, with the US, with South America as well, access to Africa, to the Indian subcontinent, as well as the Far East. It is a perfect melting pot for all people from all kind of, economic backgrounds, cultural backgrounds. Even the way of thinking is different between the East and the West. The way they perceive capital, they perceive technology is completely different. And therefore, this challenges you to look outside your comfort zone. This challenges you to think outside of the box. There is no box in Dubai. We are here to push the limits. We are here to push the boundaries.
Dubai is becoming probably the capital of the world when it comes to crypto. And I think many other countries will follow. We'll look at Dubai as the example to leverage on crypto to attract talent, to attract technologists. And this is a positive story. And it's in a certain ways what is also happening in El Salvador. After Bitcoin became legal tender, also there, more investment, more interest, more development in the country. So eventually, there are 4 phases of adoption. First, they ignore you, then they mock you, then they fear you, then they accept you, right? I think that now crypto is crossing the attack phase and going in the acceptance. And certain countries were faster than others in accepting Bitcoin and crypto. And so those countries are the ones that will capitalize the most because the first mover advantage always pays off.
In the 1800s, I think it was, you had gold and silver were vying with each other. And some countries like China and India actually stored a lot of their national reserves in silver, while other countries chose gold. And actually, China and India lost a major amount of their purchasing power because they had their reserves predominantly in silver, and gold became the standard. If you have a similar type of turnover, or at least if you have Bitcoin rising from its current base of $500 billion to something like gold at $20 trillion total value, the countries that choose to store a significant percent of their national reserves in Bitcoin will rise in their relative purchasing power as compared to countries that don't. And so that starts to become very interesting from geopolitical perspective and the power dynamics between different nations.
I think it's interesting that a developing country like El Salvador has sort of broken away from the traditional advice that they're given on how to manage their country and gone with this Bitcoin approach. And so it's given an idea to other countries, hey, you don't have to follow what the IMF and the World Bank tell you. Here's an example of doing something different. Maybe it's better for your population not to follow these rules. So I think we'll see more sort of like less wealthy countries doing it because they've seen that over the last 50 or 60 years, the advice that they're given by the Americans and the Europeans is not good advice. It's not in their best interest. And so why not use a free currency owned by the world that's not controlled by Washington, D.C. or Brussels? I think that we're in a transition period of a global financial system. We're going to change it. The elites will resist the change, which means they're going to print a lot of money, more money than that's ever been printed, because they don't want the post-World War II U.S. Hegemony to change. And I think now is the time for this to happen.
I think if you look back at the history of the superpowers in the world, it was England, then America. America seems to be slowly kind of falling off the superpower tier one. And I personally believe that the next superpower will be a network state, powered by hopefully the blockchain and governance.
Each government adopts certain regulations. They are increasingly understanding how to work with crypto, creating various tools for regulation to protect less tech-savvy users from scammers. I believe this is what adoption is all about, when ordinary people can easily buy and sell, avoiding the risk of receiving coins from scammers. But beyond safety, regulatory measures also pave the way for innovation. By setting guidelines, governments can encourage businesses and startups to integrate crypto in ways that are transparent and secure.
The institutional adoption of cryptocurrencies or Web3 products and services are still quite limited. And I believe the main reason for this limited adoption is lack of regulation. So in Europe, we have MiCA coming into enforcement, but still very early. The largest market in the world, which is the US, still do not have a clear regulation regarding Web3 products, including cryptocurrencies. So once we have regulation in place, I think we will have a massive adoption quite quickly. And just the fact that we have ETFs right now being approved in the US and other Web3 products approved in the European Union and some other leading states across the world will definitely push for adoption.
A big win for the cryptocurrency.
A wave of Bitcoin ETFs have been
big news coming in that these ETFs based on the price of Ether have been approved.
Spot Ethereum ETF set to begin trading today.
The probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030.
Let me be clear. I think ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset.
There's a completely different game now. With Larry Fink coming out and being our biggest advocate of Bitcoin and crypto, that's the signal to the rest of the world that if the biggest asset manager in the world is now offering Bitcoin to its clients and then recommending it as an investment, it's so much different than anything before.
The ETF feels surreal. After so many years, finally people have access to invest in a very easy way, right? Because most people don't want to be their own custodian, don't want to maybe have the mental energy to go to Coinbase. And so the ETF is explosive in that way. So I think it's very encouraging to see institutions get excited. You know, you've been hearing it for the last, or I've been hearing it for the last 4 or 5 years. A lot of banks, a lot of institutions will tell you, hey, we're very excited about what this technology can mean for our business because we can save money, we can, scale our business, we can, do things faster, better, cheaper. But come back to us when there's better regulatory clarity. Come back to us when there's more positive sentiment on the space. And I think something like the ETF really comes and legitimizes this as an actual asset class. And that is probably one of the most defining turning points of this industry.
For some people, they might view the approval of an ETF as a reason to trust Bitcoin, because they, maybe they already trust their savings and investments to financial institutions. For them, it might seem that that is a legitimization of Bitcoin. It means that Bitcoin is safe to invest in to them. So a combination of accessibility and institutional blessing in a way, like regulatory approval and institutional offerings, it does bring different types of investors in who wouldn't otherwise invest.
What ETF has done, US ETF and Hong Kong ETF has done, is that it has brought not just banks, but central banks, pension funds. US states like Wisconsin invested in BlackRock ETF. So even the state of Wisconsin is holding Bitcoin in its treasury now. So this has started a snowball effect, which will not be stopped. Now, for sure, 100%, Bitcoin is here to stay. So crypto is here to stay. It's not going anywhere.
Now you've got the clouds moving away. You've got that clarity about the industry. Regulators have acted. And now with the spot ETF, you just have such a clear, clean path for adoption. And you're seeing that clarity, is being perceived very positively by the traditional world. They're feeling a lot more comfortable talking about crypto. They're feeling a lot more comfortable moving on from NFTs are a scam. And I'll only see that continuing to evolve, and we've seen that reflect in the price.
With the adoption of ETFs for both Bitcoin and Ethereum, the question arises, which cryptocurrency will people choose? Bitcoin, the most well-known cryptocurrency, is often regarded as digital gold, a store of value. In contrast, Ethereum has established itself as the foundation for a new internet, a decentralized web. Both have distinct purposes and appeal to different segments of the crypto community.
Bitcoin and Ethereum are the two most important technologies. Bitcoin is slow, Bitcoin is important, Bitcoin is the dad. Unfortunately, Ethereum has stopped being as fast as it was in the beginning, but nevertheless, it offers smart contracts and the ability to create. It is the second most important asset in any case. And also, on Bitcoin, what do we see? Dogecoin, LTC, some coins come out. Whilst Ethereum has created a plethora of powerful technological coins, which makes it a leading technology, respect to Vitalik. For me, he is the most significant crypto adopter among the living. No one has seen Satoshi Nakamoto. I know people who claim to have been part of the Bitcoin development group, and they actually say it was a group of developers. But there is no proof, we haven't seen them. The person we see is Vitalik. We hear Vitalik speaking, and he really takes action.
When I first started the project, the first thought that I had was that this was just a fairly small thing. I would get it done within a few months, and it would exist, and people could benefit from it, and then I would go back to university. It actually took me until Bitcoin Miami in January 2014, where I saw just the sheer scale of interest in the project, that I realized that this would actually be bigger, and that I'm staying out of university for a long time. I first heard of Bitcoin when I was 17. I was attracted by, I think, a lot of things about Bitcoin at the same time. There is the technological and mathematical aspect. There is the economic and political aspect, the ideas of Austrian economics, the idea of creating a currency that can't arbitrarily be inflated, that is unconnected to a government, and is just people voluntarily doing things independently. There's the fact that it is free and open source software, and you can personally go download it, you can see what the code is, you can try changing the code, you could see how the entire protocol works and write your own things that talk to it. So I appreciated, I think, all of these different angles, and I started getting deeper and deeper into the Bitcoin space. And eventually I had this idea that it just makes sense to build something general purpose. And this was something that like those projects were not willing to go straight into doing, but I just immediately felt like this was the obvious step that you should just start from. And so I started working on a white paper for like what a system that contains a general purpose programming language would look like. Sent that white paper out. Some people wrote back saying that they wanted to help, and Ethereum project started from there.
ETH is going to be really interesting, and I think a lot of people are overlooking its significance. They want to see something that's cheap and fast and that works. But cheap and fast that works, that's decentralized, is very, very, very hard to do. I mean, no one's really done it yet. Some people might say Solana has, but like when Solana was really tested so far in this bull run, it didn't hold up. It seems like the path that Ethereum is taking is the same as Bitcoin, where they want Ethereum layer 1 to always be like the most secure and trusted smart contract layer in the world. And to do that, they need to not innovate it on it so much and accept the fact that base layer Ethereum is always going to be pretty slow and kind of expensive, but it's the most secure smart contract platform in the world, and battle tested, right? And Bitcoin and Ethereum have never been hacked or gone down. I think that ETH itself and the fact that all these layer 2s are being built on top right now, they all contribute value and revenue back to base layer Ethereum. So it's been frustrating this bull market to hold as much as I do and to not see it pump very much, but I do think that the time will come where it does skyrocket. I do expect there to be significant inflows in ETH, and yeah, it's not what people would build today if they're starting from scratch, but it's what we have right now. That's the most trusted smart contract platform in the world.
Vitalik Buterin is a true visionary. He has expanded the use case of blockchain technology with Ethereum, enabling for its mass adoptions through decentralization and smart contract deployments. The Ethereum ecosystem has transformed the digital economy, and I admire how it continues to evolve.
Ethereum might have a little bit of a problem with the transactions, the amount of transactions you can do. It is the blockchain that everybody's going to eventually use for creating complex financial products. Yes, Matic seems to be creeping up on it, right? Because it's you could actually run multiple applications on Matic, but it's more centralized than Ethereum is. And on top of that, Ethereum, you could create several layers, multiple layers, so like a second layer for your specific project and be compatible with Ethereum at the same time. So it makes the most sense.
I think that Bitcoin succeeds, I think that Ethereum succeeds, and I think that Solana succeeds alongside those ecosystems. It's more just the different flavors, and one analogy that you can use is there are different economies in the world, right? And so you have America, or you have China, or you have the European Union. Those all have different flavors that appeal to different citizens. Citizens sometimes will immigrate, go to other places. You also have trade relations between those economies. And so I think that as Bitcoin, Ethereum, Solana, Avalanche, so on scale, you'll start to see representations that more look like global economies, where you have immigration between those different nations, you have trade relations between those nations, and they have different systems of production.
The rise of Ethereum also gave birth to the NFT boom. Non-fungible tokens, the bulk of which are running on Ethereum blockchain, have revolutionized the concept of ownership in the digital world, from art and collectibles to virtual real estate.
I think the NFT is a fantastic technology for engagement. Like even for some of our user engagement campaigns, even though some of the NFT has no value, but it really creates a bonding experiences because that's still an expression and a badge. So I think the tricky thing is, what are the users actually want? I think the first phase of NFT are still a lot of speculation and investment driven. So you might have a few less appreciation for the value of the NFT that you're trying to engage with you with. But later on, I will expect that the next phase of NFT will need to balance between the utility and the investment side of the value that bring to the market.
Like for me, it's just mind-boggling when people think NFTs are dead. It's just, I don't understand if they really know what NFTs mean. So we're talking about that digital world, okay, that we all live in. Now, I've got my AirPods in my pocket. I've got my AirPods on almost 24/7, except when I sleep and when I'm doing something where I'm not allowed to put them on. Otherwise, they're always on, okay? When they're on, I'm in that virtual world. Zoom is the new boardroom. You've got Instagram is the new aspect of socializing. You've got filters of the new makeup. Whatever you want to use as an example, we live in that virtual world. Now, that virtual world is a closed ecosystem. You really can't own anything in there. YouTube says you own that video. A bank says you own those numbers on the screen. So you've got all these intermediaries that allow that virtual world to function. But you cannot own an asset like I own this jacket. So how does NFTs change this? Well, now the whole concept of ownership exists. So once you add ownership into that virtual world, it essentially becomes a digital representation of the physical world. The only things that we're missing from that virtual world are physics and ownership. Now, physics is replaced by code. So right now I can't jump over and fly here, but in a virtual world I can fly, I can do whatever I want because code replaces what we have here as physics. And then the other one is ownership, and now NFTs allows for ownership. So once you add ownership, you've just got a replica of the physical world. You could do almost anything you could do in the physical world, in the virtual world, without central entities allowing it to function. No central entity says I own this jacket. How do you know I own it? Because I wear it. Physics allows me to wear it. But in the virtual world, you own it because it's registered on the blockchain under your wallet address. So this is one use case for NFTs that excites me a lot that not many people are talking about.
I think NFTs are this complicated thing. There's a lot of good use cases that I like. I like NFTs that have interesting properties attached to them that are parts of other applications. I like it when NFTs can help make really good works of art get funded and help artists in all kinds of countries around the world basically make the same amount of money that you can make in the West. And I think those things are really cool. The thing that I'm less excited about is the $3 million monkeys.
In 2 years, NFTs will be worth nothing, zero, which they pretty much are. But they should be, because there was a lot of rubbish created. But it's just like Web 2. When the internet came along, there was a boom, it went mad, it crashed, and then the real product started developing, which has value. Exactly the same as NFTs. All the rubbish got created quickly, all the nonsense, all the hype, it crashed, it's crap. Now is the time to build real things where the value is in the technology, the value is in the fact it's tapped to the blockchain, and the value is in what you can create, which gives value to the investor. Before it was, how can I make money? How can I make money? How can I make quick money? And it was, now there is an opportunity to build something with value, and real beautiful things can be developed with NFTs. And I think it's a great opportunity. And I think people have realized you can't just give people JPEGs. You can create interesting stories, journeys, narratives. You can build communities. There are a lot of things you can do with the NFT. I think it's just a case of getting rid of the rubbish and now building with value. Because when I create an NFT, I want the guy to be able to buy it for a 20th of what it's worth. At that moment, I'm going to sell it to you for a 20th of the value I know it has. So immediately that you buy it, you've 20x'd your investment. That is the sign of a good situation. These are the 8 heart NFTs that when I land the painting on the moon, you get a signal in NASA's, in Cape Canaveral, in NASA's, control room, and it goes beep, 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 beep. As the moon lander lands, it goes then the artwork is on the moon forever. When it lands, these are released digitally back to Earth. 8 hearts go back to Earth, and then they get sold and they raise money for 8 charities. It's not about just owning a digital asset. It's about buying into what the artist is about. What are they about? What is their intention? What do they want to create with their community? Because artists have more power than they've ever had, ever, in the history of art. Other than in the papal times with Michelangelo and Da Vinci, this is the most powerful time for the artist.
I think when we look at humans and how they value collectibles, this is one of the oldest forms of money was collectibles. You know, beads and everything else that had a lot of high input in terms of cost or scarcity. If you believe in Bitcoin scarcity and proof of work model, you believe in collectibles, right? It's inherently kind of tied together. Will people want to have collectible digital assets? Absolutely.
NFT is the easiest way to do it. Adoption in the last bull market. But I feel like schoolmates talk to me, in a previous bull market about what is crypto. They only know about Bitcoin and NFT, which proves that NFT do a very, very good job about attract new people come to this space.
First of all, if you think about the first quarter of this year, NFT sales was still close to $4.7 billion. So at the end of the day, yes, it's lower than it was last year, but I would say it's anything but dead. The entire sort of what we describe as the open metaverse is $1 trillion space. The economic activity is that of small countries. If you think of, for instance, what's happening in DeFi at roughly $100 billion of sort of monthly sort of volume of trades, for instance, we think of the space as lower than last year, but actually growing quite healthily. And I think the metric, very similar to sort of when you think about .com back in sort of 2000, 2001 when .com bust happened. Yes, the share prices were down, company valuations were down. However, the activity, people using email, using sort of, in this case for Web3, on-chain transaction actually is on the increase. So the amount of people that are basically, if you look at that data, for instance, the activity, most of them being Web3 games, is actually higher than ever before. And it's distributed. So before, really, you only had one or two titles that were the dominant players, and now you have many of them out there. So as a result, I think the market's become healthier, and there's more wallet activations, there's more smart contracts coming out. In Web3, capitalism is embedded. That means you have both the boom and busts of these market cycles. But that doesn't mean that the underlying principle of digital ownership isn't important. It is very important, and more people are joining the space.
One of the primary drivers of new cryptocurrency adopters today is the gaming industry. Since the inception of CryptoKitties in 2017, blockchain-based games have evolved into a significant cultural phenomenon. Tens of millions of people spend countless hours breeding virtual animals, constructing immersive worlds within the metaverse, or engaging in addictive tap-to-earn mechanics. Telegram CEO Pavel Durov said Katizen, the tap-to-earn crypto game built on Ton blockchain, has reached 26 million users and earned $16 million from in-app purchases.
The way that I actually got into crypto properly was probably through CryptoKitties, particularly with NFTs. In fact, our studio in Vancouver, Fuel Powered, was involved in helping build CryptoKitties. And when that basically took off in 2017, we saw its potential. And really what excited us wasn't the financial aspects. I mean, we knew about Bitcoin and Ethereum from before. What excited us was around digital property rights and the ability to actually own your digital items and things like games. That's actually what pulled us into it. So it's really NFTs that pulled us into the world of crypto rather than, say, Bitcoin.
Blockchain games could be good, but the most important thing for a blockchain game is that I think it needs to be fun without the blockchain part. Like when you're making a game that has a trading component, you're making an economic system, right? And from a currency accounting point of view, it's zero sum, right? For every dollar that someone gains, someone else has to lose a dollar. And so if you're going to do something that does play to earn, someone else has to be playing to spend. Right, but then for those people who are losing, like ETH or whatever currency on the accounting table, for them to stay, they have to be getting some other kind of value that drives them to keep staying, right? And like this has been done in the past, right? Like basically you just have to make a game that's fun. I mean, I think EVE Online is a good example of this. It's not a blockchain game, right? But it was like the game that made headlines back in the early 2000s for, major space battle happens and a $25,000 ship has been destroyed, right? And back then, like $25,000 was impressive, right? Like I remember reading that as a kid, and like I knew that $25,000 is like a year of like the average person's salary. It's enough to buy a car, and like it's just a purely virtual item. And in 3 hours of playing a game, somebody loses one, right? So at the time, like this was like really impressive and really mind blowing. But obviously the players kept coming back, right? And the reason why the players kept coming back is that EVE Online is actually fun. So Like, that is the sort of thing that I think someone making a blockchain game today has to replicate if they want to be successful. Like, for the people who are gaining money, like, okay, it's play to earn and that's fine. But like for the people who are losing money so that the others can gain, like they need to have some other non-monetary reason that is like worth the cost to them for them to keep coming back, right? And I don't think that the first round of blockchain games really provided that, but I am optimistic that people kind of learn the lesson that that is what you need to have.
I expect the gaming industry to evolve alongside decentralized applications. Popular games like Counter-Strike or GTA will start to integrate cryptocurrency, allowing players to tokenize the time they spend in these games and their achievements. Imagine a world where hours spent mastering levels or collecting rare items result in tangible, tradable assets. Players could buy, sell, or even rent their in-game assets through blockchain marketplaces.
The gaming industry is enormous. There are many corporations and companies that have been in this industry for decades, and it doesn't make sense to compete with them directly. However, it's possible to create trends. It's all about community engagement. Gamification is the process of involving an audience in a particular activity. Through gamification, you can explain something to people using a specific product. That's why gamification is one of the key and important factors in any project.
The mass adoption into crypto will be gaming. I think you've seen that already. The amount of investment going into games, the amount of adoption, the amount of users some games have is astonishing, even during a bear market. So I think gaming will bring the masses into crypto, even though this is already happening, along with probably DeFi. And I think the gaming will bring the masses into the whole concept of the metaverse, which suddenly now no one wants to talk about because it's no longer sexy. No one talks about NFTs and the metaverse. I'm obsessed when it comes to NFTs and the metaverse and the open metaverse. And I think gaming will be the first metaverse that has mass adoption.
In stark contrast to the traditional financial world, dominated by serious professionals in suits and ties, the crypto industry brings a sense of fun to making money. Increasingly, a diverse range of individuals, from teenagers to seasoned asset managers, are adding meme coins like Pepe and Shiba, dog with hat, to their wallets.
I think it was 2022, 2023, something like that, a bear market. I was in New York, and I was doing a collaboration with another guy who makes YouTube videos. And one of the things that we wanted to do was we wanted to go out in the street and just ask businesses and just regular strangers if they hold Bitcoin. Almost everybody said no, but a lot of them said, no, I don't have any Bitcoin, but I do hold some Doge and Shiba, you know? And that was like what? Like, wow, this thing is just a meme, right? I mean, and so that's when I had to think about like what is going on here. And it creates a really interesting market. Meme coins are a way for people to speculate that don't have to understand the complexities of crypto. Before, when people are marketing their project, they're trying to tell the world how it's going to change the world, when most people don't even understand what an altcoin is or does. You know, more or less that like parallelized EVMs with modularity, with data availability over here, and sequencing and smart like that's not, most people don't understand that, right? But if it's a funny, cute dog with a hat, like, bro, it's literally just with a hat, and so people can understand that. It's relatable, it's funny, it makes them laugh, and they'll buy into that.
People love being able to buy a lot of something because the divisibility problem. When people hear about Bitcoin, it's too expensive. They don't understand that they could buy just a small fraction of Bitcoin. And even if they do, they think, well, why do I want a small fraction of Bitcoin? Because nobody goes to the store and say, hey, can I get 1/100 of an apple? No, you want the whole apple. So people like to buy a lot of something and hope for one day that it becomes like $1. So imagine being able to spend $1 worth of dollars on Shiba Inu and to get millions of them, and then dream about the day it's worth $1 for each Shiba Inu.
I think for lots of people, it's fun. It's a fun activity. Right now, we have like C-list, B-list celebrities who are issuing these coins. As people realize, the creators realize that they can make a lot of money doing this, you're going to see a higher quality of celebrity doing meme coins or these token drops or what have you. And you're going to get more and more people interested in them. So I think it's, we just started. Yes, it was like, a peak and then a trough, but everything's a cycle, that'll come back. I think super specific things that only appeal to a very narrow set of the population probably aren't gonna do so well. It needs to be sort of something that, a grandma or a teenager is gonna find either funny or engaging.
I have a friend who earned enough from Dogecoin to buy a Rolls Royce, and I was trying to dissuade him from investing in it. He was buying Dogecoin at 007, if I remember right. And I was advising him, let's diversify, don't invest everything at once. But he said, no, I want to go all in. I told him, no one does it that way. And a month later, he got himself a Cullinan. It can drive you crazy if you are taking everything too seriously. Meme coins are the spirit of the time. They are fun. We all need to treat life more easily, earn easily, lose easily. Most likely these tokens will eventually drop to zero, but before that, they might give a tenfold return.
Right now, there are over 560 million cryptocurrency owners worldwide. And according to research by Boston Consulting Group, crypto adoption is likely to accelerate further, with the number of crypto users reaching 1 billion by 2030. But what can the community do to engage more users into the space?
We need less cults. Crypto can't be a cult where it's like, oh, you're a normie, you can't learn about this anymore. It has to be about, oh, you don't understand it? I'll teach you about it. So I have faith in that community. So I prefer to think about this idea that wherever we're heading, it'll be the right spot, as opposed to thinking, how can we get to the exact future? Because there's so many, there's an idea of the butterfly chaos effect, right? One small thing can change the whole industry next week, or in a year, or in 5 years, or 10 years. So predicting it is, in my opinion, futile and almost impossible. There are definitely going to be some fundamental things that are changing and evolving, but I think DeFi will become more usable. AI will definitely get deeper and deeper into the blockchain systems. I think we'll onboard more users. I think SocialFi will take off. I think that's a big opportunity. And then I definitely see an intersection between all these CBDCs and digital currencies with crypto. It won't be a good one, but a lot of governments, I said before, right, these governments have to represent the people. The people want crypto. So the government is saying, yes, crypto, but centralized, and it's a CBDC.
CBDCs, basically central bank issued digital currency, is a step in the right direction. First of all, just the fact that a central bank starts issuing something on the blockchain will help increase the speed of regulation. It will help reducing the cost and the transparency, and also the speed of settlement between the central bank and other banks that participate in that network. It will also help traditional consumers that are holding cryptocurrency the potential to get settled faster. And with the regulatory framework that the central bank brings into the payment network, I think consumers in general that are into cryptocurrencies will benefit.
My best guess that all we need is CBDC. As soon as we have cryptocurrencies that are supported by banks, like crypto dollar, crypto yuan, crypto euro, as soon as that happens, mass adoption is there. Because at the end of the day, if you ask even our parents, can you transfer me USDT? They'll be like, what is that? A lot of parents and people who are probably 50 plus, right? It's harder, and even for me, sometimes it's hard to trust to new things. So I think there is a sentiment of fear and risk, and I believe the latest statistics say even in US, around 80 or 85% people, they are afraid of crypto, because we hear all the time news how something got hacked or the exchange went down and nobody got reimbursed. So because of that, people are willing to stick to centralized banks. And I think as soon as the fear disappears, then there will be a huge mass adoption.
To me, it's very similar to the early days of the internet. In the early days of the internet, when someone was going online and reading an online magazine, they're like, why should I do that? I'd much rather open the pages, the color is nicer, I can feel and touch it, right? So who needs online, right? And in 2000, 2001, people were saying the internet is dead, nobody's going to use it, because, reading something online was just not as fun as reading something physical online. But there were clear benefits of reading online, and eventually that's all we do today, right? And Web3 is the same.
I think the latest numbers is around 7 billion people that have a phone, right, and have internet connection, but they don't really have access to economic opportunity, right? And so in many ways, like, the niches people that are currently, active, like, on, DeFi and doing stuff, but the vast majority of people are still excluded from this new digital economy. Stablecoins, especially in markets that have high inflation, that's like killer. That already has product market fit, killer feature.
Definitely Central and South America and Africa are leading the way. The very reason is that they are subject to heavy inflation and quick depreciation of their national currency. So all the people living in those countries are getting sick and tired to becoming poorer every day. So they are looking to crypto as an alternative, as an option to save their families.
I believe that very soon everyone will switch to cryptocurrency. And fiat and traditional currencies will become a thing of the past. We are already seeing a downward trend in their popularity. To me, it's just a matter of time. Within the next 5 years, our financial system will completely change in terms of technology. The way we transfer funds will no longer be the same. It won't be an intra-bank transfer, but instead, people will be transferring tokens because it's much easier. Even Swift is currently testing blockchain solutions.
Over the next 4 years, I see great potential in terms of market stabilization, with the market becoming more stable and without such sharp fluctuations. The main question is about mass adoption, how people will embrace the crypto world and integrate it into their daily lives. It's this integration into everyday life that will influence the growth of the market.
The industry will likely see greater regulatory implementations, more mainstream use case, innovation in scalability and security.
Now I think we're starting to see a shift to sort of additional financial products, right? So yield, building wealth, access to kind of loans, right, for people to start businesses, or even kind of business-to-business transactions. So I think we're increasingly moving from this being something that people may use to, okay, I want to, this is an interesting new asset, or, oh, I have this one use case, to, no, actually a lot of people's financial life starts moving, on Web3 rails.
The crypto journey is remarkable in the sense that you really start to question a lot of things that maybe historically you haven't. What gives fiat value? What are the certain trust assumptions that you're making when you're interacting with a particular platform on the internet, thinking about security a bit more. And so I hope that everyone can go through that process, because in many ways that was one of the better parts of my entire track record in crypto, is those early moments where you start discovering and be like, oh wow, the world actually doesn't work this way. No matter what point you discover crypto, I think we could probably all agree that we still haven't seen mainstream adoption, but it's getting closer. We're getting more interesting applications that maybe your mom and dad, your friends that have been skeptical for so many years will finally start using, maybe without understanding that they're using crypto. And so I would question everyone that says that crypto is late. I don't think that I've never met an investor that has been able to time markets perfectly. But I do think that if you have long-term conviction, then the best thing is to just take the long-term view that this is perhaps one of the most defining transformational pieces of technology on par with like AI. And crypto really fits in just broadly the innovation. It's just sort of an extension of the internet. It makes the internet much more powerful. And so I think we would be dumb to think that this is over and we're going to stop innovating. I can't time the market, but I do think I'm very early still. And so taking a 5, 10, 20 long-term view, I think this is why I'm here. This is why I dedicate my career to crypto, because I think this is one of the most important socioeconomic transformations of our time.
So, what is crypto nowadays? Is it a safe haven people resort to in turbulent times to save their money? Is it merely a toy for institutions and large funds that already hold a significant portion of Bitcoin's supply? Or is it a tool for decentralizing the global financial system? The answer to these questions varies for each individual. However, one thing is certain: some crypto assets will become cherished by institutions and conservative investors, serving as a hedge against dollar inflation and a means of capital protection. Meanwhile, other assets will find their value within local communities, becoming vital and beloved by those who, before the advent of crypto, were entirely unbanked. Crypto's dual role as both a financial instrument for the powerful and a lifeline for the underserved illustrates its transformative potential. No matter how you treat it, crypto is undeniably reshaping our world. And it's up to us to decide how we will become part of this revolution.